one of the biggest factors that have been hitting Bitcoin lately has really been China and the idea that China is really speaking out against it. And I have no idea whether or not this has any kind of a lasting influence, but Donald Trump came out and called Bitcoin and cryptocurrency a fraud. So you have always this very divided fence between the people who think that Bitcoin and cryptos are the future and those, and generally they tend to be either governments who have their own personal reasons for protecting their own digital currency, let's say the case of China, or politicians like Trump, who are really looking to gather followers, and probably the older followers at that. Whether or not the ransom money that was retaken has anything to do with the drop, I would say it has something to do with it, but I would not call it a major reason why, because there's another way to look at it, and that is one of the other big concerns about Bitcoin has been its ease for use for illicit things. And in this case, it was used for something illicit, but it was easily traced back, probably more from an era that the people involved with the ransom had, which is they sort of had a visible address and the FBI was able to track it. So that's a long-winded answer in terms of really what has been representing in Bitcoin all along, which is the strong love and the strong hate. As far as the actual currency itself, there was a tremendous amount of support that we saw at 30,000 in Bitcoin. Ethereum, although I didn't expect it to break 2,500, sort of stopped at 2,300. And at the end of the day, we're getting a little bit of a bounce. So I do believe that we're still in a far range, but we're still in this range of 30 to 40 in Bitcoin. And it probably behooves traders who are interested to be buying on the lower end of the range where they get the best risk. If it breaks down, they're out, that's the end of it, as opposed to buying it at the high end of the range, hoping it breaks out. At that point, that's where some profit taking should come in and maybe a small add. So that's really, it's a commodity, and that's how these are trading. They're trading like commodities. They're very emotionally charged. What we look for in terms of trading is relationships. And when the relationships start to divert, like we're seeing now with crypto in the market, that generally is good information. So in other words, people who might have been scared that the stock market would go down today, seeing the particular strength, again, particularly this afternoon, may not have been so quick to panic out of their long positions because they see Bitcoin's going down, stock market's holding firm. Bitcoin was going up for a while as a hedge. What's happening here is Bitcoin is really still trying to establish its footing in terms of what exactly is the relationship to everything, to itself, to the market, to inflation, to the dollar, to gold, etc. Well, we have so much going on. We have the G7 going on, which right now, the big talk that has come out of it has been the idea of this global corporate tax structure, which actually could be a positive in the long run in terms of stability and the inability for corporations to move from country to country looking for the lower tax. Of course, that will be interesting to see whether or not it passes. Then on top of that, you have this infrastructure package where there was some news this week that the Democrats were going to try to force it through without the Republicans, yet the Republicans are sort of on the same page, except there's a distinction between how much money is being allocated. So is there going to be an infrastructure package? And then really Thursday, I think, is probably one of the most anticipated statistics coming out, which is the CPI, because even though Janet Yellen is saying inflation is probably good for the market, a little higher rates are probably good for the market, the CPI could be a big surprise, number one, which could certainly rattle things. And number two is, regardless of what she's saying, and regardless of the Fed talking about the bond buying program in the secondary market starting to taper, the yields are down and the TLTs have had a really nice big move up today. So the market is trying to figure out what's next. What is next? Is there going to be this $6 trillion package, more stimulus? Is the inflation going to create more pressure on the Fed? Will there be higher taxes? All of this is up in the air. Meanwhile, like I always like to say, if you take all that, call it noise, and just follow price, What we like to see in the market is the Russell 2000 taking charge, which it is doing right now. The transportation looked a little iffy, but it's starting to hold some key support. And of course, the S&P 500 has gone on to make new all-time highs. So just looking at pure price, right now, there's really not much to be concerned about. Of course, that can change on a dime, but I think the investors are sitting there thinking, Fed's not concerned about inflation. Yellen's not concerned about inflation. They're probably not going to do anything unless it's insanely high on Thursday, that number. So all good, all good. Let's keep buying. Well, this is something we've been talking about because oil's been strong for a while, and OPEC has hinted that they're not going to do anything in terms of raising the production. Their meeting is going to be coming up at some point soon. The weekend, which was a holiday weekend over Memorial Day weekend, had some of the highest amount of vehicular traffic, and the gas pumps were flowing even though the price has gone up. So there's that back to work, back to play, back to normal scenario that's happening. And also, again, it's a good thing until it's not when it becomes too inflationary. So all of this really, if you take all of this and remove it all, inflation is still, to me, the hottest topic here because people think this transitory inflation could be a thing, and I'm thinking no. So that means oil could go up to $75 a barrel next. We'll see what happens from there. Gold can continue to rocket up even though it's taken a pause along with silver. We're still seeing the food commodities going up. Even though there's been a little bit of a correction, it's probably a buyable one in steel and copper. So I think this commodity super cycle is really not even hit yet. And when that happens, that's when we could start to really see a separation between people buying stocks and not worried about inflation so much, and the Fed saying, gee, we have to do something.